What's up, TikTok? What's going on? All right, T. All righty, let's get back into it. Welcome to the Financial Corner here with your boy Buck Bandit P, man. Only on the Buck Bandit P YouTube channel. So let's get right into it while we're here today. What's going on in the market, man? What's up with it? Oh, before we get into that, my bad. Let me tell y'all what we do here for all the new people who don't know. All we do is break down investing for average everyday people so we can go out here and get this money. You dig me? But listen, ain't no shortcuts, no excuses, only progress. All right. So with that being said, if you want some free stock so you can get off the sideline and start printing some money with us because the market been jumping out the gym, make sure you click the link down below, get your free share of Robinhood when you sign up. Also, if you ain't got your high yield savings account, make sure you click the link down below, get a free $100 when you open up your high yield savings account with Ally. But without further ado, let's get right into it, man. Why stocks jumped this week, man? And what I told y'all, what I tell everybody been watching out for, what I told y'all to look out for this week, man. Oil. The whole thing is behind oil and what's going on with the geopolitical. So we got some good geopolitical news, kind of good news. So let's break it down. The big trigger was the U.S. and the Iran came to a ceasefire. It was a 2-week ceasefire, and it lasted for about 2 seconds because right after that, Israel bombed, and then it was the ceasefire was over. So that's why you seen your portfolio jump a little bit with when earlier this week because the ceasefire was in. You know what I mean? Trump tacoed on a Tuesday. Go figure. So the result, the Dow jumped up 13 points in a single day. The S&P and the NASDAQ both went up 2.5%, 3% in a day. I believe that the S&P, at the time of this recording, the S&P is up about 3% on the week. The NASDAQ is up probably about 4% on the week. Even Bitcoin catching some bids. That's up about 9% on the week. So stuff is catching bids. Like stuff has started jumping when that ceasefire was announced, when Trump tacoed on that Tuesday. But when all of that happened in one day, that's scary because that's not just like a regular green day. Like the Dow don't jump 1,300 points in a day. That's not regular. The NASDAQ and the S&P, they don't usually go up 2.5%, 3% in a day. That's a major, that's not a little green day. That's like the market just chugged the Red Bull right quick and like, oh, the ceasefire and oh, everybody. But that is not sustainable. So all my new investors out there be like, oh snap, this is how it is. No, that don't happen often. Like it's just a whole lot of other stuff going on in the background, and Trump really doing a whole lot of market manipulation allegedly. So that's why the portfolios jump because of that. So it's just like Wall Street just chugged the Red Bull. So why did that happen? But like I said, because oil crashed. Oil crashed like 13, 16% on that day when the ceasefire was announced. So that's less fear of supply distribution and lower inflation pressure. Like so, as oil comes down, the inflation we not so worried about inflation because it's eventually going to come down. But investors immediately went and bought the dip mode, and that's why the market jumped like that. And even the little, even the sectors, the airlines and all that, small caps, they even caught a nice little bounce. But oil is still the puppet master right now. So a few days ago, oil was screaming past $110 a barrel. Remember, I just dropped a video on that. Oil was holding above $110 a barrel. Now it's under $100. So that's why you seen the stocks jump up like that. Inflation fears were back last week. Like just a couple days ago, we was talking about it. I was talking about inflation, how that's sticking around, how it's looking like it ain't going away no time soon. And the market was shaky. But now, since oil dropped under $100 a barrel, suddenly everybody all optimistic and they going and buy the dip mode again, right? But that just go to show how fragile the market is right now. So to all my new investors, this is not normal. The market, this is not the crypto market. And shout out to Shimshon DG. You know what I mean? He said, I'm selling my crypto for gold. See, he's on to something right there because he understand that the time we are in, the market, like, and he got crypto, so he probably understand what I'm about to say right here. The volatility of the stock market right now is not how it usually is. It's more like the crypto market. That's why my man right here said he's selling his crypto and going to just put it in the gold, because gold has fell. Gold, it was up almost pushing 500. Now it was under 4. Gold is a good buy. You want to buy some gold and stack up? That's a great thing to buy. Definitely buy some gold and some commodities. Like, I'm happy he said that, because that's real facts. Because and I'm gonna tell you why you should buy some gold after I break down this fake run that the market on, for real, because this is not a real bullish run. So big money is getting bullish again. Like, you see big money moving into tech. I'm pretty sure y'all seen the tech go up. I just called out Google and Meta last week. If you would have bought that when I said something, you up like 5-6% since last week. If you would have bought some options, you must around doubled your money. If you put in the right strike price and the right expiration and all that. I seen what them options was doing today. I said, damn, I should have put something in. But I'm not really worried about the options because I know this is not real. So JP Morgan said it's a potential of a 6% move in the S&P from here. So people were saying, is this the bottom? That's why you can't really time the market, because the bottom, honestly, the bottom might have already been in. If you didn't buy your shares already, you might have already missed the bottom, because we might not be going lower than what we was already at. You see tech and the AI names especially getting bought up again after the dip. Like I said, everybody went and bought the dip mode, and earning expectations are actually solid. And in the Q4, remember how I said a couple videos ago, earnings didn't matter because all the geopolitical stuff. But as the geopolitical stuff gets out the picture, now the earnings and all that and the forward guidance start to matter more with the market. So you see, that's why big money is starting to push back into them, because they see Google, Meta, all these companies, they got strong balance sheets. They just was beaten down because of the tech bubble. So why this all could flip that. So what all that means is the institution's big money is back in risk on mode, but they're really being cautious. They not full on risk. Like they cautious with their risk. So they just dumping a little money back into tech, because really they trying to trap us. That's what they trying to do. They trying to trap people and collect the money and leave niggas holding it back. So why this could flip fast and probably will, like I said, the war is not over. Everybody like, oh, that ceasefire lasted for like 2 minutes. Israel bombed right after that. You see what Trump tweeted on Truth Social, like, so go look at it. Like, so we back in the midst of this. That's why you seen everything cool down and everything came back to reality, because we are not out of the clear yet. And also, this, like I said, the attacks is still happening, so it ain't no real ceasefire. As soon as they announced the ceasefire, less than 12 hours later, somebody got bombed. So it was over. Like, inflation is still lurking, even though energy came down and oil is coming down, it already did the damage. Just like somebody punching you in the face, but they ain't punching you no more, but your jaw still broke. It's like, nigga, they ain't gotta punch you no more. Your jaw still broke. So that's the inflation story, and the Fed still might keep these rates higher for longer. Word on the street is they might not even cut this year. Everybody praying for a rate cut this year, but the Fed not in the business of saving investors, so they might not cut rates this year. And if the war back on how it was just last week, oh yeah, the Fed might mess around and raise the rates. So the market is basically celebrating, like the market is happy that the ceasefire in and we can buy the dip and we can get these companies at lower valuations, but it's really dancing on a trap door for real, because all of this could come back with one tweet. One tweet, one bomb, and everything could go right back to the shitter. So the real takeaway is this rally is a relief rally. People wanted to make some money. People was just chomping at the bit on the sideline. So that's all this is. This is just a relief rally. This is not a we all clear rally. All right. And the market is still being driven by oil prices. It's still being driven by geopolitics. And it's still being driven by what is the Federal Reserve going to do with these rates. Not just fundamentals alone, and not just the balance sheet and earnings reports. Like that's going to matter more when the geopolitical news get the fuck out of here. So if you think like an investor, like a pro, like a real person trying to build some wealth and not just a headline chaser, you understand that the short term is going to be like momentum and bullish, like because the big money going to come in, try to scoop up some scoop up some of these orders real quick before the war back on. And in about a week and a half, all that stuff gonna come right back because we still not out of the clear. And also, you're gonna know that the medium term is still volatile because Trump's still in office. Like, even though midterms coming up and all that, like, he ain't going nowhere no time soon. We got 3 more years of this, so we better buckle up. And the key things you want to watch for, it still did not change. You want to pay attention to the oil. You also want to pay attention to the CPI, the Consumer Price Index, and you also want to pay attention to what the Federal Reserve tone is. If they hawkish or is they dovish? If they gonna be aggressive or is they gonna fall back? Like, that's what matters. So if oil stays down, the market likely is gonna keep running. But if it flare back up, oil go back up, then everything gonna go to the shitter real fast in like a day. Just how we seen that 13 point bounce in the Dow, that's gonna be the other way. 13 points the other way if oil shoot back up. And basically, Wall Street this week is like someone who got good news after a panic attack. You know what I mean? So you was about to die, but they like, no, you ain't gonna die right now. You might got 6 months. So you happy for a day or two, but then it sink in like, oh shit, I got 6 months left. Like that's all that happened. Like, that's all the vibe and the sentiment of the market is right now. So the market not broke or nothing and all that. So don't get confused and all that. I'm happy you're here so I could break it all the way down for you. So yeah, you ain't gotta be out here tripping, thinking, oh, the sky is falling, or oh, we back in, it's all over. We back by the dip. No, bro. It's still a lot of stuff we gotta get ironed out, and there's still a lot of stuff going on in the background. So that's your Financial Friday. Appreciate y'all for being here. You already know, man. Like the page, subscribe to the channel, all that good stuff, man. And y'all know the motto, man. Let's go out here and get this money.